Hi everyone, I am Erali. Now we talk about counting the balance sheet and trial balance. Okay, first of all, we talk about double entry accounting. In accounting, credit is entries that increase the liability accounting or decrease is seed account. A debit is the opposite. It's entry that increase and increase accounting or decrease level accounting in the double entry accounting system. Transcription or recording in terms of debit and credit. Signs of debit in one accounting office opposites a credit in another. The sum of all debits must equal the sum of credits in the double entry system of bookkeeper standardize the accounting process and improve the accuracy of prepared financial statements, allowed for improved declaration of errors. All types of business accountants are recording as either a debit or credit. Okay, debit, when most people hear the term debit and credits, they think of debit cards and credit cards. In accounting, however, debit and credits refer to completely different things. Debit and credits are simple accounting terminologies that can be traced back hundreds of years, which are still used in today's double entry accounting system. A double entry accounting system means that every transcription that a company makes is recorded in at least two accounts, where one economy gets and debit entry, while another account gets a credit entry. Okay, what's T accounts? T accounts is a visual structure used in double entry bookkeeping to keep debit and credits separate. For example, on a T chart, debits are listed to the left of the vertical line, while credits is a list of the right side. The verticals making the company's general ledger easier to read. The left side of the accounting is always debit side, and the right side is the mentioned credit sides. Okay. T account examples. Here you can see T account entries. This is since entry shows that G Corporation has sold a production valuation $15,000. So this means a debit account is seeing a 15,000 increase in cash, while the value of its inventory on the credit has been reduced by that same amount. To full understanding this diagram considers that debit increase is a set or examples accounts while credit decrease them. Okay, debit decrease liability value venue or equity accounting, so while credits increase them, they must always balance each other out. Okay, and what is the trail balance in accounting? Trail balance are used to prepare balance sheet or the financial statements are important documents for auditors. So trail balance is done to check that the debit and credit columns totals on the general ledger accounting match each other, which helps spot any accounting errors. Today's credit balance and debit balance are checked automatically. You must ultimately to the need to create trial balance document. However, the trial balance are still useful for accountants who need to check their work and for auditors who may need to understand which account to adults. Okay, what is the trial balance? Okay, and we talk some trade balance includes trade balance documents list of the accounting for the general lender with two columns, one of the debit and credit dimensions. Trade balance typically includes 5 elements. Credits and debits each of the amounts from transmission during accounting periods. So associated account names, associated name, accounting numbers, the dates of the accounting periods, and total sum of all debit balances and credit balance. Okay, what is the sheet? What is balance sheet? A balance sheet is one of the fundamental documents that make up company financial statements, along with the economic statements, the cash flow statements, and the statements of retail and earning. Banks and investors will also look at the balance sheet to better understanding the financial health of your company before investing it or lending your money. The balance sheet not only provides you a snapshot of what is the company is like that moment, but it is an important document used by a lender or assess a loan request, says Franz Carr, senior advisor, products development at BDC. Okay, what does mean parts of balance sheet? Balance sheet, current assistant, fixed expense. What is the purpose of trial balance? We talk about trial balance. There are many difference between the trial balance and the here. Trial balance is internal statements, and balance sheet is initial external statement. Statement and a balance sheet is a trial balance sheet is done by taking and balance from general ledger. A balance sheet is done by using the trial balance as source. The trial balance is created to issue accounting financial affairs. A balance sheet is created to show the right picture of the financial affairs to the stakeholders. Okay, this is balance sheet formula. Assets equal liabilities plus shareholders equals. Okay, what is the difference between trial balance and balance sheet? Okay, as I mentioned, the trial balance is an internal statement. A balance sheet is an external statement. That's all. Just